Hey guys, Forex Capital here. Let's take a look and see what ADA is doing today. So looking at the daily chart like always. So, well, this is looking bullish even though that looks bearish. Let me explain. So, I'm drawing the fibs from back of May of 2018 to March 13th's low. We completed this double bottom, pattern completed. And then if you zoom out, look at this. This was another double bottom. Here's your neckline. And we're about halfway there. So let's just kind of break this down. So we didn't reach quite the 16-cent mark, which is fine. I mean, we have all the alts right now rallying, which is always good. Now, looks like we're having some indecision. However, we are holding above the previous high, which it makes me feel better because, well, the bottom line comes to as long as we stay above the neckline, so 11 cents, the 23% retracement is right there. As long as we stay above that mark, we're still this pattern still in play with the target, at about 22 cents or so. So I'm not too concerned there. Well, we might see a rally to the 38% retracement and then a pullback, and then do the next leg higher. Now we just have to wait and see. I feel like right now we're kind of in the middle of the channel, trying to decide whether we're going to go down, or we're going to break lower, higher. We're trying to decide what the pair is doing right now. Let's just zoom out. Yeah, I mean, I think those are. If I move the fibs, let's just move this a little bit. Let's see. So if I go from here, which is July 19 of 2018 to the March 13 low. So if we go down from that swing high to the swing low, here's the thing. So we had a 78% retracement, which we tried to break, but we didn't. And look at this. This is why I love the fibs. The fibs are just awesome, I think. We are holding above this 61% retracement, so the 12-cent mark. We tried to pierce the 15-cent mark with the 78% retracement, and we're trying, we didn't do it. But we might see if as long as I like it this way. If we have a pullback to the 61% retracement, and then I might buy some right there, just add more to it, and then wait for the bigger rally all the way down to 22 cents. So even though the RSI it looks somewhat bearish, this candle it's bearish, I'm still bullish this pair. The only way I would get very concerned if we break below the neckline, which is 11 cents. We break below that, and then I'm ejecting. It's just the bottom line is I'm ejecting. By the way, guys, if you guys like the video, hit that subscribe button. Don't forget to pulverize that like button, because that's the only way we're going to reach out to 7 billion people. And, you're going to help the channel grow so we can teach everyone in the crypto market. And if you get anything useful out of the video, send one friend to the channel. That way they can make money like you're making money in the markets. That being said, there's nothing to be concerned about right at this particular moment. Are we going to get a pullback? Probably. We'll get a pullback to the 61% retracement, worst case scenario, all the way down to 11 cents, which is the neckline of the double bottom. Can it get worse? You bet. We can go all the way down to 6 cents again. Is it possible right now? I don't think so, especially with the rally and the alts. So it's more doable. I mean, if we hold here, and then that will make it even more bullish. I will change things bullish because we're holding above the previous high, and then we can probably slingshot past the 15-cent mark. And if we do that, then we're moving in the right direction. But I would wait until we drift lower to the 61% retracement, or we hold above the 78% retracement, 15-cent mark. Let's just measure risk to reward right now. Well, risk to reward right in this particular pair will be hard, because if you put all the way down to, you know, the 21-cent mark, and the risk to reward is 5.4 to 1. But I feel like if you're in that middle of the range, you probably shouldn't go like that. You should probably put the that fib, the 78% retracement fib. So and then that brings down your risk to 1.23 to 1, which is crappy. That's why I would rather wait once. Sorry. See, if we wait till we get there, and if you wait, your risk reward will shift to 3.21, which is a lot better. If we go all the way down to the neckline, at about there, put stop loss at about there. So if we wait and we go all the way down to the neckline, that will be the perfect time to add, because now your risk to reward is 5.5 to 1. That will be essential. That's why I said if we have a pullback, a bigger pullback all the way down there, I'll probably just add. But or I would wait until we break the 78% retracement, because look, sorry guys, it's almost midnight, so I'm kind of tired. You would put your stop loss below the previous low with the target to 21 cents. So if we wait, this is why I make money on the markets, because you have to have the accuracy of a sniper, the rhythm of a chess player. If you wait until we break the 78% retracement, so 15 cents, and we hold, you put your stop loss right below the 78% retracement with target of like 21 cents. That puts your risk to reward, look at this, 10 to 1. 10 to 1, freaking amazing. So you see, waiting for the right time makes a big difference, because remember, Warren Buffett, all those guys have more money, more information than you, and they're right 52% of the time. So you just have to keep that in mind. I'm not perfect, so I'm probably right about 40% of the time, if that. So that's why my risk to reward have to be essential if I want to survive in this business. So like I said, we're trying to narrow down how often we're going to post the videos, guys. So just leave down in the comments below how often you guys want to see them. If you guys like the video, hit that subscribe button. Don't forget to pulverize that like button. Thanks again, guys.